G'day folks, Jim here, Thursday the 1st of May, thanks for tuning in. It's a pretty choppy session really today, ended up with the US dollar pretty much the loser. It's weaker against most currencies. That's despite a softer than expected EU CPI, which took the euro down very briefly towards the support, but it rebounded from there, and then we saw the extremely weak US GDP quarterly figure come out. The US economy seems pretty much at a standstill, and so the dollar looks under some pressure, although it hasn't really broken out of any recent ranges, apart from cable, which continues to march north towards 170. Today we've got the various manufacturing pieces of data coming out: China, Australia, the UK, and the US. But realistically, I think most the market now looking forward to tomorrow's non-farm payrolls. And being the 1st of May, it's May Day, so much of Europe's out on holiday. So it could be a bit of a waiting game, I think. But we'll go and have a look at the charts. And as we can see from the euro, it remains really pretty much within the parameters of this converging resistance and support that we've been talking about the last couple of days. Got down, tested the downside, but the FIBO support here held it, didn't really test this support line, the rising trend support, and it's now looking like it's taking out the top of the resistance. It needs to get through this 138.75-85 area to head on towards 139.05, which is this top here, as I said yesterday. There'll be sellers above there, 139.20, but there's stops above 139.30, which could see us head back here towards this 139.66. As I say, ahead of the European holiday, I don't think we should expect all that much. But if the US manufacturing data, the ISM, comes out weaker than expected later in the day, then the dollar probably will come under further pressure. You have to say that the 4-hour charts, which these are looking reasonably positive now, so it looks to me as though the euro is going to try and test the top side. Certainly the market looked pretty short going into this EU CPI yesterday, and it came out at 0.7 as opposed to the expected 0.8, but it wasn't able to follow through on the downside and quickly reverse. The dailies, though, they're pretty flat, and as I've said before, there's not really any very much change, and I'm still looking at this rising wedge, which we can see on the weeklies here as a possible formation. So in other words, this top here about just above 140, if we break through there, then maybe 142.5 comes into play. But until then, I still think selling rallies is possibly the way to go, because the ECB are not going to like it above 140, and it could well be that that's one of the catalysts for the ECB to actually finally ease monetary policy, which would see the euro head back lower. That remains to be seen. In the meantime, I think just hold your fire and really wait for the non-farm payrolls tomorrow. But it does look to me as though the euro is going to test the top side. On the dollar yen, well, there's not an awful lot to add there. We had a 102.64 to 102.02 range, so well within the recent trading range between 102 and 102.80. The 100 and 200 hour moving averages here at around 102.40, and as we said in previous days, I think they're going to continue to act as a pivot at least until the non-farm payrolls tomorrow. The 4-hourlies are pretty flat, and the dailies likewise, so I wouldn't be getting too excited either way, and I suspect there are probably better things to trade than the yen at the moment. One of those being sterling, which held on to its rising trend support yesterday above the 100 and 200 hour moving average, and it shot up to 169 after the release of the weak US data. That put the dollar under pressure. Sterling got up to 169, as I say. It's come back a little bit now, and it's sitting on this previous peak here at 168.75. Now, as we've said before, this is the 4-hour charts. This was a 5-year high, and it's taken that out now. And if we need to go out to the weeklies, as I've said before, and we're now really looking at 170, and this particular top up here at 170.41, I think it is. The rising trend support needs to hold. That's at 168. Where are we? It's now at 168 sort of 20. A break of that would see us head back down here towards 167. Probably unlikely today. We've got the UK Manufacturing PMI out today. Now, if that's a stronger number again, then 170 is going to come into, well, a break of 169 will sort of head towards 170, and we may see that tested. A weak number would see us back down here towards this support. But I don't really think ahead of tomorrow's non-farm payrolls we're going to do too much today, particularly given as it's a European holiday. Dollar Swiss likewise, that's extremely choppy. It got up to 88.5, fell back sharply after the US GDP, and it's sitting around this 88 figure level at the moment. Let's go and have a look at that 1 hour chart. So I suspect that we're going to hold this support down here, the previous low around 87.70, but I don't think we're going above 88.50 today. And ultimately we've got the 100 and 200 hour moving averages here. They're trading around 88.20, so that might cap it, and I think probably 87 3/4 to 88.25 probably covers it on the day, given the European holiday. The Aussie, that might prove interesting later on. We've got the Chinese the Chinese manufacturing PMI. We've also got the Australian manufacturing PMI out this morning. The Aussie is trading just under 92, under 92.90. It did get up to 93. But as we've said in the last couple of days, the channel still provides the parameters. The top there is about 93.15. The base here, which coincides with this rising trend support, that's down around 92.10. So I'd use that as a guide again today. A break of 93.15 if the number is a strong number, which I don't think it is. Some people are talking it markedly lower. But that would take us back towards sort of 93.40 and possibly onto a 90. This area here, 93.15 is the breakout level, and 93.80. There's not an awful lot of support before then if we do head higher. A weak number though would see us quickly back at 92, sort of 10.15. A break of 92 would see us at this neckline support, not about 91.85. While that holds, I'd be a buyer, but I'd have a stop and reverse. I think pretty close underneath there, about 91.60, as we could then head down to 91.35. And if we go under there, then I think all bets are off for any further strength in the Aussie, and we're probably heading back towards 91 and 90 cents. Kiwi, well, that had a pretty stellar day today. I don't really know why. It started off at 82.5, so 85.5 in New York, and after the GDP, it rallied strongly to the 50% pivot of the move down. It got to a high of 86.35. It's been correcting ever since then, and the hourlies are looking as though they're turning a little bit lower from having become overbought, but the 4 hourlies are still positive. So if we can take out this 86.35 eventually, then we're heading up to sort of 86.50, 87 the figure, and then possibly back to 87.45, the previous top. I think that's some way off. The dailies are not really looking as though we're going to see that much of a positive move, and it could well be that we're tracing out another shoulder, squeezing out the shorts before a move below, eventually below the neckline, which would take us could potentially take us a fair bit lower. But for the time being, the short-term charts are positive. I think it's going to be choppy though. I'd still think that in the longer term, that if we see a rally towards sort of 87, it's probably not a bad sell, because I think we could eventually get another test of the neckline down here around 85.30. That's unlikely to be seen today, although the Chinese numbers will give us the first hint, and then of course we've got to wait for the non-farms tomorrow. So that's really about it today. It's the manufacturing data that's going to be watched. We've also got we've got US personal expenditure and consumption today. Janet Yellen will also be speaking. There's nothing out of Japan. Apart from the UK Manufacturing PMI, we've also got net lending, consumer credit, and mortgage approvals out of the UK, and the Australian Manufacturing PMI locally. But because it's a European holiday, I don't really expect too much action until the US get going. So that's about it for today. Keep your stops tight. Have a very good one, and we'll talk to you tomorrow. Cheers.